welcome to EduTap and welcome to Finance 360 Degree session. And in today's session, we are going to discuss two very important news articles. The first one is regarding the SEBI and the second one is regarding the Financial Fraud Risk Indicator. Okay, and these two news articles we are going to discuss in today's session. Give me a thumbs up first of all if I'm clearly audible and visible and everything is fine. So do give me a thumbs up if you are able to see and hear clearly. Good morning everyone. Welcome to the session. So good to see all of you in today's session. So today we are going to discuss about the SEBI that has mandated the e-book mechanism for the private debt securities above rupees 20 crore. So the different guidelines we are going to understand in this, that what the SEBI has said in regards to the mechanism. Okay, the second news article is regarding the Department of Telecommunication that has introduced the FRI, that is the Financial Fraud Risk Indicator. And let me tell you that with the MuleHunter.ai that is launched by the Reserve Bank of India, there is a lot of focus that is given to the cyber frauds. There is a lot of focus that is going towards the financial frauds. So this news article becomes very important, okay? And both these news articles, they are very important from your objective point of view of the examination. So these two news articles we are going to discuss in today's session. Okay, so let's start with the session. But before that, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link of the Telegram channel is provided in the description box below. Okay, so let's get started with the first news article. That is, the SEBI has mandated the e-book mechanism for the private debt securities above rupees 20 crore. So this is the news article that we have to understand. But before going towards this news article, let's understand about the electronic book provider and the electronic book platform. Okay, so first of all, electronic book provider, this means a recognized stock exchange. So a recognized stock exchange, that is the National Stock Exchange, Bombay Stock Exchange, they can work as the electronic book provider. Now they, pursuant to obtaining approval from the SEBI, but they will have to take the approval from the SEBI before providing the electronic book platform. Okay, it provides an electronic. So once the stock exchange has got the approval from the SEBI to work as the electronic book provider, these stock exchanges, they can provide an electronic platform for private placement of the securities. Okay, so this electronic book provider, it is most importantly, it is for the private placement of the securities. Now electronic book provider platform, this is the electronic platform that is provided by the electronic book provider for private placement of the securities. Okay, so electronic book provider, a stock exchange, a recognized stock exchange, after getting the approval of the SEBI, can become the electronic book provider that can provide the electronic platform for the private placement of the securities. Now, how many of you know about the private placement of the securities? Anyone that has any idea regarding the private placement of securities? So see, private placement of securities, it is like your private club where only a few groups or only a few people can go in. Okay, so private placement of securities means that here the company is selling its debt securities to a pre-selected number of individuals or a group of investors, rather than doing the public issue to the public for the debt securities. Here only a selected group of investors are chosen for the debt securities, for the selling of the debt securities. Okay, so this is the idea. So selling securities to a pre-selected number of individuals and institutions rather than publicly on the open market. So this is the private placement of the debt securities. So private placement of debt securities means that the securities are being sold to only a few group or only a group of the investors that are pre-selected, and it is not, the private placement means it is privately placed, it is not provided in the public domain. This is the idea. So now debt securities, I hope many of you already know about the debt securities. Debt securities are the bonds and such. These are the debt instruments through which the companies can raise the funds from the investors, can get the money from the investors. Okay, so this is the debt instrument where it is written that, okay, the debt is taken for, let's say, 2 years at the interest rate of 10% per annum, and the interest will be provided in the half yearly basis. Okay, so this is the idea, that this is the debt instrument through which the corporates can raise the debt from the investors. Okay, and private placement of securities means that the debt securities are privately placed to a group of investors. Now coming to the next part, that is under the new framework, what is happening, that the use of the electronic book provider platform is now mandatory for the private placement of debt securities as well as the NCRPS. The NCRPS is the non-convertible redeemable preference shares. I hope you know about the preference shares. They are the shares that have the priority in the dividend. They have the priority in the dividend. So whenever the company is releasing the dividend, whenever the company is releasing the part of the profit for the shareholders, the preference shares, they get the dividend on priority. Okay, so they have the priority. Now the preference shares holders or the preference shareholders, they usually do not have voting rights, but they get priority in the case of the dividends, as well as whenever the company is getting liquidated, whenever the company is getting sold, whenever the company is closing down, then the preference shareholders, they get their money in priority. Okay, so now non-convertible redeemable preference shares. Non-convertible, first of all, means that the preference shares cannot be converted into the equity shares, into the normal shares where the voting right is provided. So in the preference shares, normally they do not have the voting rights, but they have the priority in getting the dividends. Okay, while in the equity share, they get the voting rights. Okay. Now the preference shares, non-convertible preference shares, means that these preference shares cannot be converted into the equity shares, into the normal shares. Redeemable means that they can be redeemed by the company, they can be bought back by the company. So non-convertible redeemable preference shares means that these are the preference shares that cannot be converted into the equity share, but they are redeemable by the company. That means these preference shares can be bought by the company. So non-convertible redeemable preference share means a preference share which is redeemable in accordance with the provisions of the Companies Act of 1956 and is not convertible into or exchange. It cannot be converted, it cannot be exchanged with equity shares of the issuer at a later date. This is the idea. Okay, so private placement of debt securities and the non-convertible redeemable preference shares and the municipal debt securities, if it is a single issue of, if any, of rupees 20 crore or more, that means at a single time, in a single manner, in a single issue, one time offering is happening of the debt security of rupees 20 crore or more, in this case it is mandatory to use the electronic book provider platform, so that the private placement is happening in the electronic manner, so it is more transparent that who all investors are getting the shares, so the process is more transparent. Okay, so if a single issue of the private placement, if a single issue is happening of the private placement of debt securities or the non-convertible redeemable preference shares or the municipal debts securities, if the single issue is of 20 crores or more, then it is mandatory to use the EBP platform. That is the idea. I hope this is clear. Now the next is, if a shelf issue is happening consisting of multiple tranches which cumulatively amounts to rupees 20 crore or more. Okay, so this is the idea. So here, if a shelf issue is happening, shelf issue means that it allows a company to register a large issue, that is, let's say 100 crores. The company wants to do the debt issue or the debt securities issue of 100 crores. So the company wants to do a self issue. In this case, in the case of self issue, it allows a company to register a large issue, say of 100 crores with SEBI at once. So the the company is taking the permission from the SEBI that we want to raise the money through the debt securities worth 100 crores. But the company is saying that we do not want to raise the money at one time. We will raise the money in tranches. Let's say 20 crores or let's say 30 crores are raised in April, 30 crores are raised in November, 20 crores are raised in the next year and such. So a self issue allows a company to register a large issue with SEBI at once, but then they raise the funds in multiple tranches over time. As they require the money, they keep on raising the money. Okay, so this is the self issue that consists of multiple tranches. The money is raised in multiple tranches, but the permission and the registration of the debt securities happen at a time with the SEBI. Okay, the permission is taken at a time, which cumulatively amounts to rupees 20 crore or more in a financial year. In this case also, it is mandatory to do the private placement of debt securities on the EBP platform. Now, if a subsequent issue is happening where aggregate or all previous issues. So in case of subsequent issues, let's say a company has raised the money 7 crores through the private placement. Now, is this compulsory? Is it compulsory to do this on the EBP platform? It is not, because it is less than 20 crores. Okay. Now, again, the company has raised 7 crores through the private placement. So company is raising 7 crores again through the private placement. So it is also not compulsory to do it in the EBP platform. But now let's say that company again is raising 7 crores. Now this cumulatively is how much? It is 21 crores. So as soon as the company decides to raise 7 crore more through the private placement, now it will be compulsory for using the EBP platform. So this is the subsequent issue, that when the subsequent issue of the shares is happening through the private placement of securities, subsequent issue of the debt securities happening through the private placement. So it will be compulsory to raise the money through the EBP platform when the subsequent issue becomes 20 crores or more than 20 crores. I hope this is clear. That if a subsequent issue of the debt securities where aggregate of all previous issues by an issuer in a financial year equals or exceed 20 crore, in this case, it will be compulsory to use the EBP platform. So when the initial issues are happening, if it is less than 20 crores, it is fine. Do it through any means that you want to do. But once the subsequent issues and the cumulatively it has become more than 20 crores or it has become equal to 20 crores, then whatever subsequent issue is happening, even if it is of 2 crores, that also has to happen through the EBP platform. Any confusion anyone has in this? Okay. Under the new platform, so under the new framework, the use of the EBP platform is now mandatory for the private placement of debt securities, the non-convertible redeemable preference shares, non-convertible redeemable preference shares, and the municipal debt securities. The private placement, if it is happening of these securities, and if the issue size is 20 crores or more than 20 crores, then it is mandatory to use the EBP platform. Previously, the mechanism was mandatory for all private placement of debt securities with an issue size of rupees 50 crores or more. Now, the issue size has been reduced to 20 crore or more, okay, to make it more transparent and such. An issuer, if desirous, may choose to access the EBP platform. This is not mandatory. This is on the choice of the issuer. If the issuer, they can choose to access the EBP platform for private placement of securitized debt instrument. The securitized debt instrument we have discussed in the previous session. In just 2 or 3 sessions previously, we have discussed about the securitized debt instrument, in which what happens that various debts or various receivables of the banks or of the different institutions, they can be clubbed together. So let's say the different loans that are provided by a bank and the different receivables that are provided by a bank, so they are clubbed together into a security, that is a securitized debt instrument that will be sold to the investor. So this is the idea. So this is the securitized debt instrument. Or security receipts. Security receipts are given by which companies? If you can tell me, I will be very happy to know that you are aware about it. So security receipts are issued by which companies? Is it asset management companies, asset reconstruction companies, the body corporates? Which companies actually release the security receipts? Okay. Next is the commercial papers or the certificate of deposits and the issuers constituted as REITs, that is the real estate investment trust, the small and medium real estate investment trust, and the InvITs may also access the EBP platform for the private placement of units of REITs, SM REITs, and the InvITs. So that means all these instruments can also be issued. All these receipts or all these instruments can also be privately placed through the EBP platform if the issuer wants. Okay. So this is the idea. Yes. So security receipts, they are issued by the asset reconstruction companies when they want to buy a bad loan and they do not have enough money. So they issue the security receipts to raise the money from the investors. This is the idea. Okay. The commercial paper, this is the a debt instrument through which the companies can raise the money for the short term, but these are the unsecured debt instrument. So commercial paper, they are usually for the short term debt that the companies are taking. Okay, commercial the certificate of deposits are released by banks and such. So this is the idea, that these instruments can also be privately placed through the EBP platform, but there is no compulsion as such in this. Now, issuer of debt securities, issuer of the non-convertible redeemable preference shares and the municipal debt securities on the private placement basis of the issue size less than 20 crore, they can also be placed through the EBP platform if the issuer wants, okay. But for equal to 20 crores and more than 20 crores, it is compulsory. But for less than 20 crores, it is as per the choice of the issuer. Now coming to the next point, that the quantum. Now whenever the debt securities, have you heard about the IPO, the initial public offering, that let's say the Paytm for the first time, or let's say the LIC for the first time was releasing its shares to the public. Okay, so IPO means initial public offering, that is for the first time the company is issuing its shares to the public. Okay, that is first time the public offer is being made, the public is provided the shares of the company. Now in this case, usually you must have heard about the anchor investors. Anchor investors. Have you heard this term, anchor investors? So see, anchor investors, these are the investors that before the release of the shares to the public, the anchor investors invest in the shares of the company. So why do the anchor investors invest in the shares of the company? To, like, let's say huge anchor investors, big investors, they are investing in the shares of LIC. So the small investors, they will recognize that, okay, these big investors, they are interested in the share of this company. That means this is a very good company. As well as the price discovery also happens, that the anchor investors, they are ready to purchase the shares at rupees 200 or at rupees 300. So the bidding is happening in between rupees 200 to 300. That means these big investors, they help in the price discovery also, that we want to buy the shares at this price. So this is the basic idea of the anchor investors. These are the investors that purchase the shares before the initial public offering, just before the initial public offering happens, so that the anchor investors can, like, if the big anchor investors are investing in the shares of the company, so there is more trust and credibility that generates of this shares of this company. Okay, so this is the basic idea. Now it is also said that the quantum of allocation to the anchor investors, in the case of debt securities also, the anchor investors, so before the debt securities are privately placed for the group of investors, the debt securities can be purchased by the anchor investors. And if the huge anchor investors, the big anchor investors are purchasing the debt securities, a part of the debt securities, so it is realized that this debt security is very good because the huge anchor investors are interested in this debt security. So the quantum of allocation to the anchor investor shall be at the discretion of the issuer. That means the issuer will decide that how much of the debt security can be given to the anchor investors, subject to the total allocation to the anchor should not exceed the base issue size as per the threshold that is mentioned here. So base issue size means that, let's say the issuer wants to issue the debt security at rupees 20 crores. Okay. Now, if the instrument rating, that is if the debt instrument is rated at AA to AA minus, then the anchor portion of the base size should not exceed 30%. That means anchor investors can only purchase up to 30% of the debt instrument. If the instrument rating is A plus, A minus, not exceeding 40%, anchor portion should not exceed 40%. In the case of others, that is in the case of the debt instrument that has lower rating, in that case, the anchor investor should not invest more than 50%. That is, anchor portion should not be more than 50% of the base size. Okay. Now, anchor investors, they provide stability, credibility and momentum to a debt private placement, acting as a catalyst for broader investor participation, because if the anchor investors, especially if the big and recognizable and like trusted anchor investors, they invest in a company or in the debt instrument of a company, it is recognized that, okay, this debt instrument is good because these anchor investors are trusting or they are trying to buy this debt instrument. Okay, so it also is a catalyst for broader investor participation. Now, anchor investors shall provide electronic confirmation on the EBP platform of their participation by T-1 day, that is before the issue. See, T-1 means T is the issue day. So, before the issue day, 1 day before the issue day, it has to be confirmed by the anchor investors that they want to participate in the debt instrument or not. Okay. So, this is the idea that anchor investors shall provide electronic confirmation on the EBP platform of their participation by the T-1 day, that is before the issue day, 1 day before the issue day. So, -1 means before the issue day. Okay. So, this is the idea. Now, we are towards the last slide for this news article. So, the green shoe portion shall not exceed 5 times the base size issue. See, green shoe portion, this is usually in the case of single issue. When the single issue is happening of, let's say, 20 crores and more than that, in that case, it is when the single issue is happening of 20 crores or more than 20 crores, it is mandatory to do the issue or to do the private placement through the EBP platform. Now, in the case of single issue, there is a term that is known as green shoe portion. Now, green shoe portion shall not exceed 5 times the base issue size. Now, what is green shoe portion? So, a green shoe option or the green shoe portion, it allows the issuer to raise additional funds beyond the originally planned issue size. So, originally planned was 20 crores or originally planned was 50 crores, let's say. But the more can be raised if the investors are very much interested in the debt securities. So, more money can be raised through the investors. So, that is the green shoe option. So, green shoe option allows the issuer to raise additional funds beyond the originally planned base issue size if there is excess demand from the investors. So, if a company plans to raise 20 crores, it has to be raised first of all through the EBP platform, through the private placement, let's say. The maximum now, so if a company plans to raise 20 crores, this is the base issue size. The maximum the company additionally can raise through the green issue option shall not exceed 5 times. That means it shall not exceed 100 crores. So the base issue that the company wants to get, or the base issue size or the money that the company wants to get, is 20 crores. But let's say investors are very much interested in the company and the debt securities of the company, and a lot of demand for the instrument is coming. So the company can raise up to 100 crores. That is, the company should not raise more than 5 times of the base issue size. This is the idea. Next is the issuer shall provide the placement memorandum. That is, the issuer has to inform that the issuer wants or the company wants to do the private placement of the debt security. So, placement memorandum, placement information has to be provided, and the term sheet that consists of summary of important terms and conditions related to an issue. So, the issuer shall provide the placement memorandum and the term sheet to the EBP, to the electronic book provider, that is the stock exchange, at least 2 working days prior to the issue opening date. So, 2 working days prior to the issue opening date. And however, the issuer which is issuing the securities for the first time through the EBP platform shall provide the above information about the placement memorandum and the term sheet at least 3 working days prior to the issue opening date. This is the idea. Now, issuer shall ensure receipt of in principle approval from the stock exchanges. That is, before the placement of the memorandum, before the placement of the term sheet, before that, the in principle approval has to be taken from the stock exchange prior to the date of providing the placement memorandum and the term sheet of the EBP. Okay. Next is revised timelines have been introduced to obtain in principle approval from the stock exchanges before T-2 and T-3. So, T-1 means that 1 day before the T day, T-2 means 2 days before the T day, and T-3 means 3 days before the T day. Okay. So, revised timelines have been introduced to obtain in principle approval from stock exchanges. So, in principle approval from the stock exchanges has to be taken before T-2 and or T-3 for the EBP based issues, as well as, let's say, non-EBP based issue is happening. That means in the stock exchange, let's say, or there is the non-EBP. That means, let's say, there is the private placement of the debt security that is happening of 7 crore only. So, it is not compulsory to do the placement in the electronic book provider or in the electronic platform. So let's say the private placement is happening in the non-EBP form. So in this case, the information in principle approval has to be taken from the stock exchange before the issue opens for the non-EBP issues. So basically, in the case of EBP issue, in the case of the private placement that is happening through the EBP, in that case, in principle approval has to be taken before T-2 or T-3, prior to T-2 or T-3. But in the case of non-EBP issue, in the case of issue that is happening in non-EBP manner, in that case, the permission in principle approval has to be taken before the issue opens, just before the issue opens. Okay, that is the idea. Just before the issue opens means a day before the issue opens. It's not like that you are opening the issue at 10 a.m. and you will inform at 9 a.m. No, a day before the issue opens. So before the issue opens. Now coming to the next news articles. Doesn't it lead to price inflation as due to anchor investor? See, usually the anchor investors, they are investing in huge amounts. So if they are investing in huge amounts, they also know that how much they want to invest, at what price they want to invest and such. Okay, that can also happen, Bilabi, but that's why I said na that anchor investors that are trustworthy, that are huge anchor investors, that cannot be swayed by the company. Okay, it can be possible. In the case of Paytm, we have seen that anchor investors invested and they soon like get out of the investment also, like they invested before the Paytm like IPO opened. So the anchor investors, they invested in the Paytm shares before the IPO opened, and just after the IPO was listed in the stock exchanges, the anchor investors started selling their shares. So they knew that there is something fishy, and still they invested because they knew that after that they can get out of the situation. Okay, so yes, this can happen, but that's why you have to see the anchor investors that are trustworthy. Now coming to the next news article, that is a shorter one. So Department of Telecommunication introduces the financial fraud risk indicator to strengthen the cyber fraud prevention. So basically, in a major step towards fighting the cyber fraud and financial crime, that both of these are becoming very prominent now. Like I have seen many of my relatives getting calls that, okay, just transfer the money, I'm like this or that, I'm your mother or I am your grandmother, transfer the money, I require the money immediately, or I am this government official, I'm talking from this police station and transfer the money and such. So many of these phishing attacks are happening, many of these calls are happening, and many of the people that are quite innocent or they do not know about these frauds, they get entangled into these circumstances and they start giving money. And again, later on they realize. Okay, so in a major step towards combating the cyber fraud and financial crime, the Department of Telecommunications, now Department of Telecommunications, you can understand that they have the mobile numbers and they can access they have the access to the mobile numbers and they can easily block the mobile numbers if they want. That is the Department of Telecommunications has the access to the data, we can say. So, Department of Telecommunication has announced sharing of financial fraud risk indicator with stakeholders like the banks, NBFCs and such. This tool is developed as part of the larger system called the Digital Intelligence Platform. So, basically it is said that the financial fraud risk indicator, this FRI will be shared with the stakeholders. You will understand that what is this FRI, but this FRI will be shared with the stakeholders, and this FRI is a part of larger system called the Digital Intelligence Platform. So financial fraud risk indicator, this FRI, this is a risk-based metric that classifies a mobile number to have been associated with medium, high or very high risk of the financial fraud. Okay. So now how this is recognized? So first of all, the financial fraud risk indicator is a risk-based metric that will classify the mobile number as a medium risk, high risk or very high risk. Okay. Now this classification is an outcome of input obtained from various stakeholders, including reporting on the Indian Cybercrime Coordination Center. So if let's say some person has reported that, okay, fraud has happened with me and this mobile number, I got the call or I got the SMS or I got the WhatsApp from this mobile number. So reporting has happened on the Indian Cybercrime Coordination Center. So the data will go here that, okay, this number was engaged in the fraud. National Cybercrime Reporting Portal, DOTs, that is Department of Telecommunication, has a Chakshu platform. Now through the Chakshu platform, what can happen, that let's say you have received a fraud call or you have received a fraud communication through your WhatsApp that transfer the money here and you will get a job soon and such, or let's say through SMS you are receiving some fraud communication, or through call you are receiving some fraud communication, you realize that okay, this is not correct. So you can go to the Chakshu platform and you can feed in the information that I have received the fraud communication through this number, through the SMS and such. So this is the Department of Telecommunication Chakshu platform, and there is intelligence. Let's say banks have shared the intelligence that through this account, through this number that was connected with this account, the fraud has happened. Financial institutions also can share the data. So all these data that is collected by these different platforms will go to the will be used by the financial fraud risk indicator to classify the mobile number as medium risk, high risk and very high risk. Okay, this is the idea. It empowers the stakeholders, especially banks, NBFCs, UPI service providers such as the Google Pay, Phone Pay. I will give you the example also. So it empowers the stakeholders to prioritize enforcement and take additional customer protection measures in case a mobile number has high risk or very high risk. In that case, the bank and the NBFCs can take the measures that we are going to understand now. So this is the idea. So FRI is a result from multi-dimensional analytical tool to empower the financial institutions with advanced intelligence for cyber fraud prevention. Okay, as soon as a suspected number, so as soon as a suspected mobile number is flagged by a stakeholder, let's say through the Chakshu platform, it is recognized that this mobile number was engaged in a financial fraud, or this mobile number has done, or it was engaged, or it like did a call for the financial fraud. So as soon as the suspected mobile number, it's not like that it is suspected, like your friend is giving your number to the Chakshu platform, okay, this is the financial fraud. So it's not like that your mobile number will be blocked at the time. No, there is actually the proper the verification happens, the proper there is the proper the verification and everything happens. So it is not like that your mobile number will be blocked immediately. Okay, so as soon as the suspected mobile number, so first of all the mobile number is suspected, this is flagged by the stakeholder. It can be Chakshu platform, bank, NBFC, or it can be any the portal also. It undergoes multi-dimensional analysis and classifies into medium, high or very high financial risk. So first of all the mobile number goes under the analysis and it is classified as medium, high or very high financial risk associated with it. It then shares this assessment about the number immediately with all the stakeholders through the DIP. Okay, so basically if the medium risk, high risk or very high risk, this information is shared with all the stakeholders, with all the banks, all the NBFCs and such. This will enhance cyber protection and validation checks in case of mobile numbers flagged with this tool when digital payment is proposed to be made to such numbers. So basically what will happen, that majorly the focus is when the digital payment is happening to this mobile number. So at that time the blockage will come, and here you can see as one of the initial adopters of the FRI, PhonePe has used it to decline transactions linked to very high FRI mobile numbers. That means even if let's say a fraud call happened to you, you trusted the person that okay, something has happened and I have to give the money, and you are transferring the money, but the money will not go because the number is flagged as a very high FRI, if in as a very high risk. Okay, so the money will not go from your account to the other person's account. In the case that the number is flagged as a medium risk, so in that case before you are sending the money, so you will get the notification that okay, this number is the flagged number, this number is having the medium risk, or this number is having the risk. Then you will recognize that okay, maybe fraud is happening because I am getting this flagged message. Okay, so as one of the initial adopters of FRI, PhonePe has used it to decline transactions linked to very high FRI mobile number, very high risk mobile number, and display an on-screen alert as part of PhonePe Protect feature. For medium FRI numbers, PhonePe is working for displaying a proactive user warning before allowing the transaction. Okay, so it's not like that you will not be able to call if your number is flagged as very high risk or high risk or such, just that you will not be able to receive the money. Okay, so this is the idea. So this will enhance the cyber protection validation checks in case of mobile numbers that are flagged with this tool when digital payment is proposed to be made to such numbers. That will not be possible. I don't know, Prakhar. It was not mentioned in the newspapers. Okay. or it was not relevant, so I didn't bring it. So now see, there is the perspective. So many of you asked about the answer writing, that which questions to practice or how to practice the questions. So for that you have the perspective 360-degree series that is very much relevant for your NABARD Grade A examination, for your RBI Grade A or Grade B examination and such. So this is the perspective 360-degree series, and this is taken on Monday, Wednesday and Friday at 5 p.m. by Jaskran sir. Now Jaskran sir is engaged in a project, that's why I will be taking the Monday sessions for perspective 360, where I will be focusing on the financial current affairs and your UPI, your digital infrastructure, your financial inclusion, that will be relevant for NABARD also. Okay, so the Monday sessions will be taken by me for the time being only, because Jaskran sir is engaged in some project. So that's why the rest of the 2 sessions he will take, but the Monday session will be taken by me. Okay, so this is the perspective 360, and this will happen at 5 p.m. Monday, Wednesday and Friday. So this is it. Now this is the first question. I hope you will be easily able to answer this question. So do try to answer this question. Let's see how many of you are able to answer this. Next, this is the second question. Again, do try to answer the questions. The questions might be very lengthy, so it might take time to read the questions. The options might be very lengthy, so it might take time to read the options also. Next is the last question. So again, just the basic idea, the purpose of the financial fraud risk indicator that you have to tell, as well as the question can come on which department has launched this financial fraud risk indicator. So the question can come on the department also. Okay. So this is it. Thank you everyone. I hope you like the session, and thank you for joining.